Good evening. Students, can you tell me whether the screen is visible to you or not? Okay. 2 more minutes and then we'll start with the session. Let's see if there are other participants willing to join. Okay, class. Now I'll start with the lecture. Uh, Before starting with the lecture, we'll do a small recap of what we studied in the previous session. In the previous session, we started with actually the most important part of investment, which always comes along with your returns. That is risk. Whenever we are investing, we check two things of our investment or shares. That is, what is the risk and return associated with that. Today, various measures which we can quantify those risks. Shaurya, mute your. You have. Okay. So today we'll learn which are the techniques through which we can quantify those risks. If you remember, we studied what is credit risk, what is systematic and unsystematic risk, how they are affecting our investment prices. In a short explanation, I can say that all these risks which I am talking about in turn will lead to fluctuations in your investment price. Yes or no? All these effect, all these risk will have only one common effect on your investment. And what will be that effect? Fluctuations in your prices of the investment, whether it may be exchange rate risk, whether it may be uh, currency risk, interest rate risk, liquidity risk, whatever type of risk we are talking about over here will lead to certain fluctuations in your share price. When we were learning the difference between risk and uncertainty, I told you guys that when we can calculate the probability of occurrence of risk and quantify it into numbers, that is how we will be able to calculate risk. Now, in statistics, there are various techniques which are used to measure this risk. today we'll be focusing on two of them. Just because we are studying two of these two techniques or these two measures, it doesn't mean that these two are the only one used. There are n numbers of methods. We'll be learning at least some of them, starting with variance and standard deviations. Is there any disturbance in the background? Not much, right? Is my voice clear to you people? Okay, great. Now, before starting with measures of risk, I told you people to study about something. I'm expecting a response of that in the chat box. I told you to study about what is active portfolio and passive portfolio. I know portfolio management and risk is your third module, but since we studied what is diversification, it is important that you also understand that this diversification is related to portfolio. So, have any of you studied about it? At least did one single Google search to understand the meaning of the terms? I would expect at least one response about each in the chat box. Please write. Nobody searched the words. I was expecting answers from at least two or three, if not all. Okay, some Shaurya has written active management is a hands-on method where managers make investment decisions to meet a market benchmark. Its objective is to generate returns above the market average, whereas passive management is like indexing, seeks to replicate market index performance by holding the same securities. Its the goal is to match index returns at a lower cost. Okay. Now I know the words which have been sent in the chat box is actually somewhat relevant to it, because when you say active management and passive management over here, they are very clearly stated someone who is willing to take more risk, because when you are trying to beat the market benchmark or you are trying to earn returns more than the market average. What is market average? जो आपके निफ्टी 50 है, अगर आपने निफ्टी 50 के पॉइंट्स चेक किए और उसमें आपको लग रहा है जो पॉइंट्स है वो आपके टॉप 50 कंपनीज का रिटर्न एवरेज रिटर्न दिखा रहा है, तो उस तरीके से अगर आप उसको बीट करने की कोशिश कर रहे हो तो यू आर ट्राइंग टू इन्वेस्ट इन प्रोजेक्ट्स और investment items which will give you higher returns. Now, with higher returns comes higher risk. So, when we say it is an active portfolio, we are assuming that the investor has a higher risk appetite. And when I talk about passive portfolio, over there, the investor is trying to attain the returns which will match the market level. इन रिटर्न उसको क्या होगा, तो रिस्क कम होगा, क्योंकि उसने ज्यादा रिटर्न्स एक्सपेक्ट नहीं किया, उसने रिस्कियर प्रोजेक्ट्स में इन्वेस्ट नहीं करना है, और इस हिसाब से उसका जो पोर्टफोलियो होगा वो कम रिस्की होगा। उसमें जो शेयर्स होंगे, जो उसमें इन्वेस्टमेंट सिक्योरिटीज होंगी, वो कम रिस्क की चूज करेगा। इस हिसाब से आप एज अ इंडिविजुअल अपने हिसाब से अपने पोर्टफोलियो को डिसाइड कर सकते हो, whether you want an active portfolio with higher returns and higher risk, or do you want a passive portfolio with lower returns and lower risk. You'll be studying this in detail in the third unit. I just wanted you to make aware of the terms that active and passive are. Now, continuing further, we'll try to study what are these measures of risk. I'm expecting you people to write along what I'm stating, because today I've not made a PPT for the same. I'll be using this word, and over there I'll be writing what am I supposed to, the notes which I'm supposed to share. Okay, students? So starting with variance first. Now, in the last lecture, I told you what is volatility. Volatility is something, when I talk about the movement in the share price, assume that variance is something which helps you to measure there. In returns, when we calculate returns of a particular product, suppose मैंने एक particular investment लिया, उसका past returns मैंने 3 years का check किया, and the past returns of the 3 years are 12%, then 15%, and then lowered down to 11%. So these are the three returns in the past 3 years. The latest years, that is the year closest was 12, उससे पहले 15, उससे पहले 11. So if I want to calculate the average return, what I'll do, I'll calculate a basic average, जैसे हम mean calculate करते हैं, expected return. So that would be 12 plus 15 plus 11 divided by 3. Whatever my answer is, let's say 12 plus 15, 17 plus 11 will be 38. So 38, let's make it 39. 39 divided by 3, 13%. So the average return of the investment I'm talking about is 13%. Now, if this 13% is the market return, ये मार्केट रिटर्न आपके इन्वेस्टमेंट में कितना फ्लक्चुएट हो सकता है, मतलब अगर ये ऊपर जाएगा तो कितना ऊपर जा सकता है, और अगर ये रिटर्न नीचे जाएगा तो कितना नीचे जा सकता है. इस चीज को अगर मैं मेजर करने की कोशिश कर रही हूँ, तो ये मेजर करने में मुझे कौन हेल्प करेगा? द स्टैटिस्टिकल मेथड विच आई कैन यूज टू मेजर दिस इज वेरिएंस. यहाँ पे आई कैन यूज वेरिएंस टू मेजर दैट हाउ फार माई एवरेज और एक्सपेक्टेड रिटर्न्स विल मूव. मेरा एक्सपेक्टेड रिटर्न या एवरेज रिटर्न कितना ज्यादा मूव कर सकता है ऊपर या नीचे कंपेयर करके. Is it clear what I'm telling? Are you understanding? Okay. I'll write down. You may make a note of what I'm writing. Variance का the basic simple definition is how far the returns can move away from the average return. इन नंबर्स आई टेल यू. मैंने एक इन्वेस्टमेंट लिया, सपोज उसका एवरेज रिटर्न मैंने अभी कैलकुलेट किया था जस्ट 13%. ये 13% उसका एवरेज रिटर्न है, दैट इज द एक्सपेक्टेड रिटर्न विच यू हैव कैलकुलेटेड. After calculating the variance, suppose the percentage of variance is 3%. Now, if this 3% means that ये 13% अगर अपने हाईएस्ट में जाएगा तो it can be 13 plus 3, that is 16%. और लोवेस्ट में जाएगा तो 13 minus 3, that is 10%. तो आपके शेयर या इन्वेस्टमेंट में कितना मूवमेंट हो सकता है? तो मैक्सिमम जो मूवमेंट है वो 3% हो सकता है. दिस 3% कैन आइदर बी पॉजिटिव मूवमेंट और नेगेटिव मूवमेंट. तो ये जो 3% आ रहा है आपके वेरिएंस का आंसर, ये आपका रिस्क है कि आपके इन्वेस्टमेंट में कितना रिस्क आपको फेस करना पड़ सकता है. द चांसेस ऑफ मूवमेंट इन द प्राइस, that is what is your variance helps you to calculate. Of course, there is a formula for this. We'll be learning the formula also. But for now, this is the definition कि आपका returns कितना fluctuate हो सकता है from the expected average return which you have calculated. Is it clear? Is the definition of variance clear? Response? Reaction? Class, a reaction from at least some of them. Okay. Now, tell me something. According to you, high variance means what? The project is, yeah, the investment is has high risk or low risk. If the variance is high, if the variance you have calculated is a bigger number, the investment will have high risk or low risk. Reply in the chat box, or you can unmute yourself and speak. Is the word file not visible? I'm writing the text. Is that visible to you students? Which are participants? Reply. BIM, BFM, Khushi. Shaurya, is it not visible? Not to anybody or just to Shaurya? Okay, to nobody. I'll see. Ruko. Is the plain whiteboard visible? Okay. So you cannot see what I'm typing. Is this writing visible? I believe Heth can see the board. Okay, wait, I'll see what can be done. Wait. Students, is a white board visible to you now? Reply while unmuting your mouth, because I've started sharing my phone screen. Okay, so I'll be typing now. I won't unmute my mic. It's a word file which I've opened. I'll type over here so that it will be visible to all of you. Now, okay, we'll continue. We were discussing what variance is. So variance is how far your returns will fluctuate in case if the variance is high. If the variance is high, the risk associated with the investment will also be high. High fluctuations is high variance, and high variance would be high risk. So high fluctuations is high variance, and high variance is equivalent to high risk in your project. Similarly, the opposite of that would be if the returns, high fluctuations in what, bachcha? So high fluctuations in return. अगर रिटर्न्स में ज्यादा फ्लक्चुएशन हो रहे हैं, मतलब उस इन्वेस्टमेंट का वेरिएंस हाई है, और अगर वेरिएंस हाई है इसका मतलब आपका रिस्क एसोसिएटेड भी हाई है. इसका अपोजिट वी कैन से दैट इफ द रिस्क इज लो, fluctuations will be low and variance will always be low. Next thing what we'll be doing, learning is features of variance. Now, what are features of variance? The first thing is that the variance will always be positive or non-negative. The variance will always be non-negative. What is non-negative? Non-negative matlab it can either be zero or it can be positive. It can either be zero or positive. Now, why is this statement given like this? Because the formula for variance is such that in that we square our deviations. So I would like to discuss this one term which is known as deviations. What are deviations? Deviations का in literal sense जो meaning होता है वो होता है change. What is deviation? Change. Now, how do we calculate this change? As I said, variance helps you to calculate the fluctuations from your expected return. तो expected return में कितना changes आ सकता है उसको हम deviations के through calculate करते हैं. और जब आप उन deviations का square करते हो, that is variance. I'll insert a table to show you how that is calculated. Okay. So let's say मैं पहले कॉलम में लिख रही हूँ returns. Students, just reply to me whether the screen is visible or not before I start with the sum. Also tell me, आपने returns calculate करने का practical सीखा था or was it just theory? To calculate the expected return, did you just sums were done? Okay, great. Okay, so it will be easier for me to explain whether the sums were done with probability or without probability or both. Class? Okay, if the sums were done, I'll cover both of it. Okay, I'm just taking some random numbers for the returns. I'll take returns for 4 years. Let's say this return is 10% for the first year, 12%, then reducing down to 9, and then again 13. Let's make this 11. So first thing, while you calculate your variance, you have to compare this variance to what? Your expected return. तो आपको सबसे पहले जो calculate करना है वो calculate करना होगा expected return of your investment. Clear? So to calculate this expected return, what is the formula? What is the formula? Submission of x upon n. What is the formula? Submission of x upon n. मतलब आप सारे इन्वेस्टमेंट को प्लस करोगे 11 plus 12 plus 9 plus 13 divide by 4. Okay. Give me the answer. Speak up the answer. Somebody will reply it. Unmute your mic and reply me the answer. 20, 30, 32. I'm expecting answer, class. See, the total comes to 45. 45 divided by 4. The answer will be in point and then we'll round it off. What are you getting? 11.25. So the answer is 11. I'll take a rounded figure. Now the answer is 11. What is this? This is your expected return. Expected return is nothing but what? Mean. Mean का symbol क्या होता है? X bar. The symbol of mean is X bar. Your mean was 11. अब आपको क्या करना है? तो आपको ढूंढना है deviations. What is this deviation? X minus mean. That is your x bar. Deviations is x minus mean, which is your x bar. तो आपको अब क्या करना है? सारे नंबर को इस mean के साथ minus करना है, which is how much? 11. So you'll start subtracting every number with your mean. Now the first column would be 11 minus 11, 0. The next is 12 minus 11, 1. The next is 9 minus 11. Tell me the answer. It will be minus 3. 13 minus 11, 2. Deviation is, अब आपका मीन कितना आया 11. तो मीन के हिसाब से, एवरेज के हिसाब से कितना चेंज आ सकता है? तो फर्स्ट ईयर में कोई चेंज नहीं था, सेकेंड ईयर में 1 पॉइंट पॉजिटिव चेंज था, थर्ड ईयर में नेगेटिव 3 पॉइंट्स का चेंज था, और लास्ट ईयर में 2 पॉइंट्स पॉजिटिव चेंज था कंपेयर्ड टू योर एक्सपेक्टेड रिटर्न. अब नेक्स्ट इज ये जो आपने x माइनस मीन निकाला हुआ है, विच इज योर x बार, उसका आपको क्या करना है? स्क्वायर करना है. यू विल बी स्क्वायरिंग इट. 0 का स्क्वायर वुड बी 0, 1 का स्क्वायर वुड बी 1, -3 का स्क्वायर वुड बी, -3 into -3 will give you +9. नेगेटिव इंटू नेगेटिव, आपका नेगेटिव नेगेटिव पॉजिटिव होता है, माइनस माइनस प्लस। 2 का स्क्वायर वुड बी 4। 2 का स्क्वायर वुड बी 4। क्लियर? अब व्हाट इज वेरिएंस? वेरिएंस का फॉर्मूला इज नथिंग बट you know the sign of sigma? Total of x minus mean the whole square divided by n. Now what is this n? N is nothing but number of years or the numbers of years for which you have taken the data. आप कितने साल का डेटा ले रहे हो यहाँ पे? 4. So in the next line, what is the total of the column? What is the total of the column? Last column का total बोलो मुझे. 9 plus 1 10, 10 plus 4 14. 14 divided by what? 4. Tell me what is the answer? Class, in the chat box. Okay, yes, Niti, I saw it just now. It should be -2. Okay, that will lead to a lot of fluctuations in our calculation. This will be 4. Okay, so 4 plus 4, 8 plus 1, 9. Thanks for pointing that out. Now the answer of yours changes. 9 divided by 4 is 2.25. Since your returns are to be assumed in percentage, आपका जो result है वो भी किस में आएगा? Percentage में आएगा. So the variance of your illustration is 2.25%. The risk associated with this project is 2.25%. I'll revise what we are doing so that you have a clear knowledge of how things are going. First, we started with what is theoretical concept of risk. Now we are learning how to measure that risk. रिस्क मेजर करने के लिए जो सबसे बेसिक तरीका होता है, द easiest thing which we use is how to calculate variance. Now variance is nothing but what deviations are possible in your investment when compared to your average return. आपके एवरेज रिटर्न से कंपेयर करेंगे तो आपके प्रोजेक्ट या इन्वेस्टमेंट में कितना डिविएशन हो सकता है. डिविएशन इज नथिंग बट चेंज. So to calculate variance, the first step in our sum is to calculate the expected return. क्योंकि जब तक आपके पास रिटर्न नहीं होगा आप कंपेयर किससे करेंगे? So we calculated the expected return of our investment. Now expected return calculate करने के बाद what we did is x minus x bar. यहाँ पे बार का सिंबल नहीं था, इसलिए मैंने मीन वर्ड यूज किया है. आई होप यू पीपल आर अवेयर कि x बार कैसे लिखते हैं. सो x माइनस x बार का सिंबल यूज करना है. फिर हमने क्या किया, जितना भी एवरेज रिटर्न्स था उन सबको मीन के साथ सबट्रैक्ट किया. आफ्टर सबट्रैक्टिंग हमने उसको स्क्वायर किया. नाउ आपको अब जो पहला फीचर मैंने लिखाया था कि वेरिएंस विल ऑलवेज बी नॉन नेगेटिव, इसका मतलब क्लियर होना चाहिए. ज्यादा से ज्यादा अब क्या हो सकता है, अगर आंसर 0 है तो 0 का स्क्वायर वुड बी पॉजिटिव, पॉजिटिव नंबर का स्क्वायर विल आल्सो बी पॉजिटिव, negative number का square will also be positive, and that's the reason you're always the total remains positive and variance will never be a negative number because of this squaring in the formula. This squaring or the amount which I'm getting as variance now will help you to determine how much fluctuations are related. This are इन्वेस्टमेंट, आप जिस भी प्रोजेक्ट को स्टडी कर रहे हो उसके इन्वेस्टमेंट में फ्लक्चुएशंस कितना पॉसिबल है, आप बहुत इजीली इसके थ्रू स्टडी कर सकते हैं. इज इट क्लियर? स्टूडेंट्स रिएक्ट, देन ओनली आई स्टार्ट विद द नेक्स्ट सम. Okay, class. I hope the sum was clear. We'll do one more sum with the same thing. I believe standard deviation won't be covered today. We'll be studying standard deviation tomorrow then in the next lecture, which I mean, I'll take another sum in which the probabilities are not given. Remember, we are doing sums in which probability of the returns are not given. Okay. I'll insert a table. Do you people want me to hold the screen so that you can copy it, or are you writing simultaneously? Okay. Starting with another sum, I'll take some numbers. Let's say the numbers are in percentage. The first year return is 20%. The next year it is 16%. The next it is 14%. 20. I'll keep a number which is even so that we have it in fourth table, or let's say take it for 5 years. Again to 18. Again 12%. So we have taken returns for whatever investment or investment we are talking about. उसके हमने 5 years के returns. Now ये returns I am taking randomly. Are you people aware that you can check the past returns of any project you wish to, either any of the demat account, or if you are not investing or not having an access to the demat account for now, to check it. If you are not, many of you might be in FY, so your age restrictions will make it impossible to download a DMAT or work on it, but you can go for screeners or any website which helps you to check past returns. Over there you can easily get past returns of your investment or shares. Once you have the past returns, the first thing which we do is calculate what we calculate expected return of the investment. So the formula for that would be adding all the investment, and then आई एम एक्सपेक्टिंग, आप पहले से एक्सपेक्टेड रिटर्न ढूंढ के रखोगे, तो एक्सपेक्टेड रिटर्न कैलकुलेट करना है. कैलकुलेट द एक्सपेक्टेड रिटर्न एंड टेल मी द आंसर. We'll add a column over here which is of total. So tell me the total only first. Tell the total in the chat box. Okay. Only one of the student has written the answer. सिर्फ नीति ने जवाब दिया है. What about others? 20 plus 16 plus 14 plus 18 plus 12. So we have a total of 80. And expected return will be calculated how? 80 divided by n, that is number of years for which we have our data. So 18 divided by what? 5 over here, because we have data for how many years? 5 years. The answer to which is what? 16. The answer to which is 16. So we have our expected return. What is this expected return? This expected return is nothing but our mean. The mean of the data is 16. Now we need to calculate deviations. Deviations are nothing but x minus mean. X minus mean, how will you move ahead? 20 minus 16. This will give you a positive deviation of 4%. Next, 16 minus 16, 0. 14 minus 16, minus 2. 18 minus 16, positive 2. 12 minus 16, again a negative effect of how much? 4. Are we doing it correct? Is everyone with me? Class? Okay, good. Moving ahead. So now we need to square these deviations. अभी हमने जो भी आंसर निकाला उन deviations का क्या होगा? Square होगा. So 4 का square would be 16. 0 का square would be 0. Minus 2 का square would be positive 4. Positive 2 का square would also be 4, and 4 का square would be 16. Tell me the total, class. Write it in the chat box. What is the total? The total of it is 40. So we have a 40. The total of the deviations का square. What we have find out here over here is total of square of deviations. Square of deviations का जो total आया है उसको आपको किससे divide करना है? N से divide करना है. You have to divide that by N, that is number of years. The formula for variance is total. I'm writing the word total because I don't have the sign of submission or the sigma sign in my keypad. I'm not able to find that, and instead of doing that, I'm writing the word. But you know, you have to use the sign of submission over here. Divide by what? Divide by N, that is number of years. What is the total over here? 40. 40 divided by 5. Do I need to tell you people to calculate this, or everybody knows the answer? What will be the answer? Now the variance over here is 8%. Why is the variance 8%? Why is the variance in the sum 8%? I would want you people to copy this. Solve this sum in your book. I'll be sharing a practice sum on this in your WhatsApp group. I'll want you people to attempt that and check the answer as well. Okay, this is one method of calculating variance when the probability in the question is not given, which means that when the probability of that return is not specified in your investment. If you know the probabilities, you can calculate it using different method, a different formula. Okay. Now, can anybody write the reason for the variance to be 8% this high? Why is the variance in this sum high as compared to the previous sum? In the previous sum, we got a variance of 2.25%. Okay. And in this sum, we got a variance of 8%. What might be the reason for that? When you are trying to reason with me, also check the returns, because this variance comes when you calculate or check it with the returns. Your variance is related with the returns of the past year. So I want reason in the chat box, because I know none of you will speak up unmuting your mic, but at least so that you have a नंबर्स और फॉर्मूला कैलकुलेट करने आ गया वो तो अच्छी बात है, बट एक्चुअली में उसको डिसीजन मेकिंग में कैसे यूज करना है, इवन दैट इज इम्पोर्टेंट. सो नाउ टेल मी व्हाई इज द वेरिएंस इन द सेकंड क्वेश्चन हाई? Yes, returns are related to risk, but that was the case in both the questions. So why the variance of the second sum is very high and that of the first sum wasn't that much? I'm asking reason for that. What you said might be correct, but over here, suppose if the returns are higher, but variance is not about higher returns or low returns. It is more about constant returns. In the first sum, the highest return in my question was 11, sorry, 13, and the lowest was 9. Highest return was 13 and the lowest was 9, having a gap of approximately 4 percentage. But in my this sum, the second sum, the lowest is 12, the highest is 20, having a gap of 8 percentage. The fluctuations, when I say the word gap, I'm talking about fluctuations. So in the 5 years, I can see a major fluctuation of 8 percentage. Whereas in the question above, I can see a fluctuation of hardly 4 percentage. So the higher the fluctuation, the higher the variance. So it is not much about high returns, it is more about constant return. अगर वो high returns दे रहा है well and good, but क्या वो returns constant है? क्या उसमें ज्यादा fluctuations हो रहे हैं? मतलब एक year उसने 25% का return दिया है, but the next year suddenly it had a drop of 10 percentage, and then again a recovery of 12 percentage. So recovery was good, but it means that in the fourth year, coming year, there will be fluctuations. The fluctuations can lead you to extreme profits or extreme loss. Is it clear? इस तरीके से आप अपने इन्वेस्टमेंट्स को स्टडी करते हैं कि fluctuations, returns high है well good, but are they constant? Are there very weekly fluctuations? अभी तो हम ये yearly basis पे बोल रहे हैं, हम weekly fluctuations check कर सकते हैं. आपके daily basis पे fluctuations होते हैं. So if you are an intraday trader, अगर आप पर्सनली इंट्राडे ट्रेड कर रहे हैं तो आपको डेली फ्लक्चुएशंस चेक करने की जरूरत है. इफ यू आर टॉकिंग अबाउट लॉन्ग टर्म इन्वेस्टमेंट्स, आप ईयरली बेसिस पे ये फ्लक्चुएशंस चेक करके वेरिएंस निकाल सकते हैं. एंड हियर वी आर लर्निंग फॉर्मूला फॉर कैलकुलेटिंग वेरिएंस. In your practical investment, when you do invest or when you make these decisions, you don't have to use these formulas. Over there we'll have those charts, we'll have that. एक्सेल में तो आपको ऑन अ क्लिक वेरिएंस मिलता है. यू हैव द डेटा रेडी, जस्ट सिलेक्ट द डेटा, put the formula for variance, you'll have the variance calculated. There are apps in which charts you already have the option of selecting वेरिएंस और स्टैंडर्ड डिविएशन, और आपको सीधा वो चार्ट लाइन में सारा वेरिएंस और स्टैंडर्ड डिविएशन दिख जाएगा. तो इस तरीके से you'll have to take a decision by looking at the variance, that how riskier the project is. Is the concept of variance clear? Class, React, Tanisha, Shreyan, Khushi. Those listening, have they understood the concept? Okay, great. Now we will study how to calculate variance when the probability of the returns, matlab what are the probability that you will be getting those returns. Instead of past returns, we are talking the probability ki suppose 5% probability hai ki ya 0.1% probability hai ki it will give you 20% return, 0.3% probability hai ki it will give you 16% return, 0.2 प्रोबेबिलिटी है कि वो आपको सिर्फ 1% रिटर्न देगा. सो ओवर हियर वी आर टॉकिंग कि आपके सम्स की या सिक्योरिटीज की आपको प्रोबेबिलिटी अगर गिवन है तो हाउ विल यू कैलकुलेट योर वेरिएंस इंस्टेड ऑफ पास्ट रिटर्न्स. So I'll share the word file again and we'll continue solving the sum using another formula. Is it clear? Okay. Want me to give a break of 5 minutes and then continue? I'll end the lecture by 6:30, so I don't think that is required. Okay, so if I'm ending it by 6:30, the break is not required. We'll continue ahead. Is the question visible to you, students? Class, is the question visible? Reply yes or no. So I'm to the screen of the question. Now look at the question. I've zoomed it out for you people. The following information is available in respect to the return from security X under different economic conditions. They are assuming that if the what are assume the market conditions, if the market conditions are good, average, bad, or poor. So if the market condition is good, they'll security can give you 20% return. If it is an average condition, over here when I talk about good average, they're just assuming situations. 16 percentage. If it has a bad, it will be 10 percentage, and if it will give you a poor performance, it will be of 3 percentage. Next to it, the probabilities of those occurrences are listed. Probability that the economy will be good and give you 20% return is just 0.1. For an average return, you have a probability of 0.4, which is almost in a stable economy if things work out without having any external systematic risk. 0.2 for poor and 0.3 for bad. Now returns and probabilities are listed for you people. What are you expected to calculate? Find out the expected return of the security and the risk associated with that. What is the chance that you will have a return, a good return, and what are the risk associated? When I say the word risk associated, they are telling you to calculate variance and standard deviation. What are they trying to calculate? Tell to calculate variance and standard deviation. I have attached the solution of the same. Now over here, you are supposed to write this, of course, even though I have attached the solution. Condition is given, we have copied the return. The returns are given in percentage, we have also copied the probabilities. The first thing, when we are told to find out variance or standard deviation, that is the risk, we first find out the expected return. Expected return is nothing but the mean or the average return. So now the average return over here, the formula for it changes. Why will the formula change? Because now the question is accompanied with probabilities. So to find out expected return, what we do is we multiply. See, the formula over here is submission of P into X. What is P into X? Probability into return. A detailed explanation of how that formula applies. The first thing which you do is 20 into 0.1 plus 16 into 0.4 plus 10 into 0.3 plus 3 into 0.2. 20 into 0.1 will give you 2. 16 into 0.4 will give you 6.4. 10 into 0.3 will give you 3. 3 into 0.2 will give you 0.6. Adding all that, we get an answer of 12%. Now, this is a new method. I don't know if this was covered in your previous module or not. But when probability is given, this is how you calculate average return. Bina probability ke we use the basic formula which is given by mean. But when the probability is given, what you do is you calculate expected return using this formula, multiplying the probability with the each return and adding all the answers. आप हर एक प्रोबेबिलिटी को उसके रिस्पेक्टिव रिटर्न्स के साथ मल्टीप्लाई करोगे और सबको ऐड करके आपको 12% एवरेज रिटर्न आ रहा है. दैट इज योर एक्सपेक्टेड रिटर्न. Are you people understanding how to calculate expected return? Class, react in some way. Okay. Was this method discussed earlier? Okay. I'll continue ahead then if we are clear with how do we calculate expected returns. Now, after calculating expected return, the process for the next one is same. What we do is now over here, they have skipped a column. What I do is I add one more column. The first thing which we do is हमको एक बार 12% क्या मिल गया आपका एक्सपेक्टेड रिटर्न. सो वी मेक अ कॉलम ऑफ x माइनस एक्स बार. जो सबसे पहला आपका डिविएशन का कॉलम होता है, इन्होंने क्या किया, डायरेक्टली उसका स्क्वायर ढूंढा है. आई प्रिफर डूइंग इट सेपरेटली इन 2 different columns. If you are good with doing it together, it is okay, but it is always better if you do it separately. Say suppose returns are your first column, followed by probability. Next comes P into X. So the returns were 20, 16, 10, and 3. The probability is 0.1, 0.4, 0.3, and 0.2. P into X is I'm trying to calculate your which return, average return. Instead of doing it horizontally, I prefer doing it in this column. We'll multiply every probability by X. 20 into 0.1 would be 2. 16 4s are 64, which is 6.4. 10 3s is 30, which is 3.03. 3 2s are 6, it is 0.6. The last column will be for total. Now the total of these percentage, that is submission of PX. How much it is? 3 plus 2, 5, 5 plus 6, 11, plus 1, 12%. That is what your average return is. In लोग ने horizontally calculate किया. I'll always tell you, do this method. It is always easier. Probability into return will give you your expected return. ये क्या है आपका? This is your expected return, which is nothing but X bar. Yeah, also known as what? Mean. Next comes your step where you calculate deviations. How the deviations is calculated? X minus X bar, which is X minus the mean. Subtract every return by 12. 20 minus 12 would be 8. 16 minus 12 would be 4. 10 minus 12 would be minus 2. Minus 2. Then the last 3 minus 12 would be minus 9. Over here you can see the deviations are very large, so we will have a high variance with us. Next comes what? Squaring x minus mean bar, जो x bar है उसका square. Now 8 का square would be 64. 4 का square would be 16. 2 is negative, but the positive of that would still be 4. Next, 9, although negative, the square will be positive, giving us a 81. अब हम लोग पहले जब सम करते थे तो what we used to do is, इसी में we used to continue. इसके बाद हम क्या करते थे? टोटल करते थे. Why we used to do total? Because there was no probability mentioned. इसका टोटल लेके we used to divide by number of years for which the data is given. Over here the number of years are not mentioned because it is for the probabilities are given. अब क्योंकि probability is given है, the next step changes. What would be the next step in this? We'll have one more column, and that column would be P into P. What is P? P is your probability. Probability का column into your deviations square. Probability column into square of deviations, which means 64 into 0.1, then 16 into 0.4, then 4 into 0.3. 64 into 0.1 किया तो आंसर क्या आएगा? 6.4. Which columns I am talking about? Column number F into column number E into column B. As you can see, the columns are named currently. तो जो B column है probability का, उसको column number E के साथ हम multiply कर रहे हैं. Next is 16 into 0.4. 16 fours is 64. Because of point, the answer will be 6.4. Next, 4 into 0.3. 4 into 0.3. 4 threes are 12. The answer would be 1.2. Last one, 81 into 0.2. Now 81 twos are you have to do. 81 cut 2 times. The answer is 162. And since there is a point, it will be 16.2. I hope you people are using calcs. Tell me the total. Tell me the total. The total which you are getting is 30.2. The total which you are getting is 30.2. So the variance, formula for variance when the probability is given, the formula for variance when the probability is given is total of P into which over here is 30.2%. Now, of course, the variance over here will be high. The reason for it, the highest return which I'm expecting from my project or security or investment is 20%. And the lowest which I'm expecting is how much? 3%. So it was understandable that the variance of the sum will always be as high as I'm expecting. I want every one of you to write this sum. I'm waiting for 5 minutes for you people to complete this. It is important. Wherever I'm using total, put the sign of sigma. If you don't know what sigma is, देखो जो फोटो मैंने अटैच किया उसमें जो एक्सपेक्टेड रिटर्न p into x के पहले जो साइन है दैट इज सिग्मा, दैट इज टोटल. Okay. If you in the chat box, I can see Shaurya has asked what's the mean. The mean over here is 12%, which is the expected return. The steps for finding out the expected return has changed, and the reason for that is in this question probability is given. So when probability is given, we multiply the returns with the probability, and get total of it. We do not divide it by number of years. Over here, the concept of n and dividing by n is not there. The reason for that is the returns are not for past years. The returns are for situations or conditions which may be prevalent in the market. उस market में कौन से situations आ सकते हैं, that can be good, average, boom, recession, उसके basis पे आपको returns की एक probability निकाल के दी हुई है, ना कि past return के basis पे. So we multiply each returns of each condition with the probability and add it. जैसे कि हमने अपने टेबल में अगर आप देखोगे, see in this table मैंने हर एक return which is our x probability से multiply किया. After getting the answer मैंने उन सब को add किया, तो I got a total of 12%. That is my expected return or mean I have written in the bracket as well. फिर हमने उसका deviations calculate किया, deviation को square किया, that is x minus x bar का square. I have attached this photo so that you also know with symbols आप कैसे लिखते हो उसको. How many of you have actually written and understood? Reply with a thumbs up so that I have a. Okay, class. Does anybody has any doubts while calculating variance? Do people have any doubt? We have done only 3 sums due to time constraint. We have covered calculating variance, use when the probabilities are given and also when the probabilities are not given. In the next lecture also, I'll just give you a brief theory about what is standard deviation, and then we will continue with sums of standard deviation and variance. Once you know how to practice or calculate variance, standard deviation is nothing but almost 90% similar, 99% similar to what we studied today. Even the steps are same, just a single step is added to it. Other than that, everything will remain the same. Is anybody having any doubt? Okay. If nobody is having any doubt, for today we'll be done with this. Do you want me to share the Word file later on? I'll have to edit it a bit. Okay, you people have made your own notes, works with me. And once you have the syllabus, has anybody shared you the screenshot of all the 5 modules? No. Okay. I believe that will also be done sooner or later, because as and when we are completing the syllabus, it will also be done. So do not worry about that. If there's nothing else for today, I'll end the session. You people may leave the meeting. And then we'll meet tomorrow at the same time at 5 o'clock, 1.5 hour session. 2 more sessions for the module, and then we'll wrap up this module, and you will be learning portfolio management and everything else. Okay, goodbye students.